Sign up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Tom's going to join us after the first break, and quite a market we got kicking things off on Thursday morning. We got the S&Ps right now trading at 37.95, quite a rebound from the lows of the overnight session. You were as low as almost 3,700, folks. You're talking about 100 S&P points from where we were last night up to almost 3,800. Quite the day yesterday to negative action today. Quite a difference a day can make. NASDAQ 100, we trade down to 12,884 overnight. Currently trading 13,228. The Dow's up 460 points, 30,652 after dipping briefly below 30,000 last night. Talk about some volatility in the Russell. Down to 2075 last night. You're up 55 points off the lows in the Russell, trading at 21.31. We got crude up 43 cents today, trading at 53.28 right now. Gold catching a bid up $9 at 18.57. Silver right now up $1.06. Look at that run in silver from 25.20 just at 8:30 this morning. You trade up almost $2 full to 27.10. We're trading 26.46, and we got to check in on a little notes and bonds, a little bit of lower price and higher yield right now as this market accelerates higher. You get the 10-year negative by 7 ticks at 137.09, and the 30-year negative by 21 ticks. And we got to check in on the VIX. Volatility index spikes to 37.21 yesterday. We're back under 30 right now at 29.14. Checking in real quick on some of the stocks that reported last night. Apple with their earnings, they're down 2.4% right now. Tesla out after the bell, down 5.3%. Facebook shares right now up 0.8%. American Airlines on the Reddit boards, they were up to $31, folks, on their earnings. My goodness, their earnings and just buying, right? American still up 14% at 18.88. We got action all over the place, folks. And where are we going to start? Let's go over to our man, Kevin Hinks. Folks, right after this program, if you haven't listened yet, check it out. You want to talk about defined risk in this market. We're all learning something. This was going to be a big week no matter what. More than 100 companies reporting earnings. Biggest company in the world, Apple. We just got fourth quarter GDP at a level of 4%. That was at 8:30, which is driving some of the action this morning. Fourth quarter GDP coming in at about 4% growth. Market was looking for 4.2%. We had weekly jobless claims this morning. There's just so much action, folks, checking out. Kevin Hinks, what's going on?
Good morning, Tommy. I think you summed it up pretty well there. I think that the markets were very jittery this morning, but if you look, everything kind of calmed down a little when the GDP hit and the jobless claims at 7:30. And the jobless claims was a nice beat at 847,000. The GDP, though it missed by a tenth from expectations, I think the market still was comforted by a 4 handle on GDP for the fourth quarter. So I think all those things caused a little bit of calming in the overall market, and I think that's really what you're seeing. I mean, the NASDAQ went from down 0.5% to up 0.5% in about 12 minutes right after that number came out. So I think these markets are firm here today. Now, that doesn't mean anything for the rest of the day, but as we sit here right now, at least some of the crisis is over. You can see that by the VIX, Tommy, now trading, down 7.5 points, down to back below 30. But yesterday was, full sell-off mode. High volatility, big moves, big percentage moves. It was everything that volatility traders wanted in this market, Tom.
Really interesting, right, Kevin? Going into a night like we had last night, especially taking out like the retail craziness that's going on with the GameStops and the AMC, which is definitely factoring into this as you have hedge funds that are, potentially going to get some margin calls. That was out there yesterday. When you're losing billions of dollars and you're a hedge fund, that could impact some other market and, some other equities. But you trade down to 37.03, and that just coming into that in terms of Apple, Facebook, Tesla, the acceleration, and Apple. I mean, how about $111 billion in 90 days? Not bad for a revenue take. And then we got the airlines this morning. There's almost so much to talk about, Kevin. What are you guys going to be taking a look at on the show coming up in 45 minutes?
Well, we have three names that we're going to focus on today, all with earnings either after the bell or tomorrow morning. Caterpillar is the first one we'll look at. Caterpillar is a really interesting stock. We've got some good topics to talk about with Caterpillar and why you should be really focused on this name. Then Best Buy. We'll look at Best Buy, the retailer. Like Folio, we'll do a presentation on Best Buy, and then we'll trade one of the payments, Visa, that we'll look at in our third section of the show. So all names with earnings coming out, we'll trade all three of them today on Fast Market.
And they already got some action, folks. You got Visa up 3%. It was at 193 yesterday. We're at 200 right now. You got Best Buy up 2.5%, charging from 113 to 116 out there. Kevin, all the talk, of course, with, GME. I mean, it's just bonkers what's going on here, folks. We all know it. I think we're all getting a real lesson here in terms of we preach it all the time. You guys preach it. That's what you preach in terms of defined risk, the ability for you to control your risk in options. And I think we're all seeing how, you have Wall Street titans that did not have their defined risk in place and almost getting shut down overnight. As a general, lesson, Kevin, you've been in this, you've been an options market maker. We've talked about it before. When you're talking to people in the market, what's one thing that, if you had to say, to take away from this besides obviously defined risk, when you look at some of this craziness going on in the market, what would you say to somebody that's kind of a novice? Because we're getting questions, Kevin, should I sell GameStop here a couple days ago even? Or so, what do you say to some of these traders out there that are just kind of coming to fruition of the type of moves that we, most people really weren't aware are possible?
Yeah, two things, Tommy. First and foremost, traders, people understanding and watching these markets, never say, well, that'll never happen, right? Because what we've learned, if I've learned anything over 30 plus years in this business, is things that you never thought could happen can happen. Who would have thought a brick and mortar retail of gaming, with most of gaming now going online, will have this happen to? Well, here's the other thing. If I've learned anything in my career trading, it is exchanges, governments, they set up rules. And businesses work very hard to figure out a way to get around those rules and still act effectively. And I think that's what you're seeing. The overall retail investor market sensed a weakness in GameStop because of short interest and everyone's talking about how these traders are manipulating the market, but no one talks about the other side. High-frequency trading, the average hold of an investment now is closer to 40 seconds, Tommy. So
that's amazing.
That's not investing. That's not what the traditional investing is. And this is what happens when you allow these things to happen. All this is people understanding the rules that were made and exploiting them. And
man,
now the government and the agencies will circle back and make new rules, and people will just figure out ways to get around them as well, Tommy.
Thanks so much for sharing the knowledge, man. You summed it up so well, folks. If you think, we're doing the probability is greater than zero, well, it might happen, folks. It might happen. Kevin, man, we look forward to the program. Have a great weekend, and we'll talk to you next week. And we look forward to the show in 45 minutes.
Always a pleasure, Tommy. Thank you.
Thanks, Kevin. We'll be right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 512, NASDAQ up 148, S&P's up 59, gold contract up $15, trading 18.60 an ounce. You get silver up $1.35, $26.74 an ounce. Light sweet crude up 43 cents, $53.28 a barrel. Notes and bonds. 10-year note down 7. 30-year off 18, and King Dollar. King Dollar gave it up once again, man. King Dollar had it every right to go higher, folks. It had the swing yesterday upside and just gave it up in spades, down 210. Euro's at 121, yen is at 104, and the British pound's at 137 at $1 US. Tom O'Brien, what's happening?
What's happening, man? There's a lot happening right now. That's what's happening.
I'm telling you, I got hung up in that traffic. Sorry about that, folks. And, you know, if you've ever seen Trading Places, folks, okay, you know, one of the best trading, one of the best films out there, period. But if you're into trading, it's really great. And, you know, of course, in Trading Places, you had the two brothers saying, turn those machines on, turn those machines on.
The Dukes.
The Dukes, thank you. Bottom line, folks, you can see, if you think this is an even playing field out here, the bottom line, you can see, I can definitely see why retail traders are going to be totally flipped out, because Wall Street is going to win this one. And the bottom line is that Wall Street has turned off the machines of trading a GameStop, of trading a AMC, of trading Nokia. And, you know, it's going to be pretty intense watching this thing shake out. Like GMC right now, folks. So picture. So GMC.
GME.
GME, thank you. Okay, you're trading, or it just halted again. But I think this thing's going to go to $149 today. Because as soon as the broker-dealer community stops people from trading it, well, you can't buy it. So what's going to happen? You only can sell it if you're in it.
Yes.
You know, so, you know, we're going to hear, Tom, these pros and cons out here. But, you know, as you've been talking about, is in most folks that we actually have on here, just as Kevin Hinks were talking about, Wall Street's always protected, folks. And you better get that straight right through your head, man. You know, because the amount of money that's been lost on Wall Street that we don't even know yet
is
astronomical.
We only know about the ones that were like fortunate enough to be able to secure capital, or the Melvins, or that
That's
haven't
right.
had to divulge. They think about it, they exited this trade 2 days ago, I think now. Yeah, so what if you didn't exit that trade? What if you still had enough margin room to hold that short or something? I'm just creating hypotheticals, but exactly, it's going to reverberate in a big way. The one thing Kevin touched on, which was great, man, in terms of, the whole conversation in financial media right now about retail traders, man, why isn't the conversation about why we allowed Wall Street Titans to be shorting stocks to allow this type of, thing to happen?
Well, and
I say shorting to the degree that they did, right? More even available shares than the float.
And that's illegal. That's the bottom line, folks. So somehow,
say that again?
That is illegal. That is where this should come down exactly.
You're saying it should be illegal, or it is illegal?
No, it is illegal. That's why I want to see how this shakes out. That how can 140% of the position be shot? Okay, it's almost impossible, but it was done. So
I hadn't. Okay.
You haven't heard it yet because it's not the press. What? The press itself, if they don't understand trading, they can't even put that thing together. But it's impossible to do that. And what has happened is, it's like if you go to the NASDAQ site, they put a rule in. Man, it's almost like 15 years ago now, that when you call stock back in, the bottom line is supposed to be called back in. There's supposed to be large fines to the broker-dealer community. Well, they haven't done that, okay? And they show the positions every time, okay? They show how overloaded it is. They call it back in, they don't get it back in, and they just keep moving on. It's a problem. Here, I got to read you this one. This one cracks me up, man. This is from Gorman, who's the CEO of Morgan Stanley, right? So. Yes. Gorman says Reddit rally traders are headed for a rude awakening, okay? So he goes like this. The CEO called the development a short-term phenomenon of retail traders banding together and trying to pull off a so-called short squeeze. That won't last. Now, Gorman, folks, the thing that cracks me up about this, right, is that Gorman is from England, okay? Great CEO, but he should know better because guess what? A short squeeze, George Soros made all his money on short squeezing the Bank of England, okay? In the financial business, folks, if there's an opening, as Kevin Hink said, they're going to go after it. And Soros basically took down the Bank of England. And that's how he got famous. It was him and I forgot who his partner is. One of the Tigers will tell us in here. But that was one of the biggest trades ever. And the bottom line is that he felt that, hey, guess what? England was going over their head. Their currency was worth too much money. And basically he short squeezed them, and it worked. So the whole thing is wild, man. And thank you, Stanley Druckenmiller. Stanley Druckenmiller was his partner. These guys were young when they did this, man. And they took him down. And the bottom line is that, as you and Kevin were talking, anything and everything is possible inside the marketplace.
And that totally, man. And that's something that, I say this phrase often well before this week, as in what's the probability of something happening? For instance, what was the probability of, for instance, today, what's the probability that GameStop goes from $500 to $2?
Right.
Okay. It's greater than 0%. So you have to keep it on the radar, man. And what these short sellers didn't do is that they had, a trade that had the, tail risk, right? Those tail risks,
yeah.
But they exist at a greater chance than 0%. And you just basically had multi-billion-dollar hedge funds treating that risk as a 0%er. And that's what you're seeing happening right now.
Yeah, it's wild, man. This is not going to, this is not going to end because now the opening's there, and the game has not changed, but it's the hunt is going to be on. These professional money managers are going to have to be really careful, man, where they take their spots.
Sure,
there's no doubt, man. There's no doubt. Pretty wild, Tom, huh?
Oof, man, amazing, man. It's a week ago, if you told me that I would wake up every morning and one of the first stocks I would take a look at was GameStop, I'd say, what are you talking about, man?
Right.
But I can't. The curiosity killed the cat, man. I'm just curious. And every day I'm not disappointed over the last few because it's just bonkers, man. What's been going on, for sure.
Right. And, the last time that we seen this, it just didn't last as long, folks, was Tilray. That I saw it anyway, okay? Tilray went from $2 to $300 in 5 days.
I think 300 on the dot, yeah.
And that didn't last long. No, that went right back down, folks. And prior to that, I suspect there were a couple penny stocks in the 90s that I saw this happen to, but, you don't even pay attention to penny stocks. So, but there's going to be a battle out here for quite a while, man.
How about AMC, right? I think they said they were able to pocket like $300 million selling into the rally a couple days ago. Real world implications for some of these companies if they are able to, I think they had the shares already ready, right, to be able to sell into market.
How cool is that?
$300 million for that company.
Keep them alive for a while. Stay right there, folks. Come right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 462, NASDAQ up 131, S&P's up 52. Let's go to Pat in Quantico, Virginia. Hey, Pat, what's going on?
Good morning, guys. Hey, I'm a little confused by this like everyone else. Whenever I hear that GameStop has 140% of its shares shorted,
Yes.
in my mind, that's clearly called naked shorting, which is highly illegal. It has been for some time. But you hear the TV business channels, they're not calling it naked short selling. Am I missing something here?
No, and that was my point when Tommy and I were talking, that unfortunately the press itself, if they don't understand the mechanics inside of it, okay, then it's hard to kind of explain. So let's go through what we're talking about. What happens, folks, it is absolutely illegal. And this is on the broker-dealer community. This is not the traders, okay? This is the broker-dealer community making a fortune on selling, on letting traders borrow stock. I've done it. So, I mean, I know how this whole deal goes, okay? The bottom line is that it's the broker-dealer community that are not following the regulations. That's what it comes down to. They're selling more than there is. And they're charging people basically for that right. That's how it works. And it's illegal, period. Yeah.
Yeah, Tom, if I understood this right from the last time this flared up several years past, isn't the rule that, let's say I have an account with E-Trade, before they allow me to short it, they have to positively identify shares that are available for shorting to be in compliance with the rules, or am I oversimplifying that?
No, that's correct. That's exactly how it works. Right. Right. So now let's bring it to the next step, because this is going to be the next step on the GME. What happens with the next step is that you have other broker-dealers that specialize in lending stock, okay? So as they're lending stock, they might be charging $1 a share to lend stock, okay? Bottom line, so it's $1,000 per, 1,000 shares. It can be any amount of money that they put on it. The traders are more than willing to pay that amount of money to the broker-dealer, okay, for that right. And you can just see that, okay, it's the broker-dealer part of it and the regulation that the broker-dealer is under that has failed. Right. And it's failed forever. You can go to the NASDAQ and see it. I mean, I used to bring this up like 7, 8, 10 years ago on the program because it used to blow my mind. Every day it would show how many is shot. And it's like, okay, I know that's against the rules. Everyone knows it's against the rules. But guess what? They did it. Yeah.
And that's something that I'm wrestling with as well, because if you and I can see this on our screens, the SEC, who's supposed to be the ultimate enforcement, why are they not taking any action against these dealers?
Exactly. And that's where, people should go to the SEC, go to the NASDAQ and ask them. Right. So.
It's funny. The history, as I understand it, they outlawed this during the Depression because there were some people doing raids and literally driving solvent companies under, and they determined it was just too detrimental.
Oh, there's no doubt. It's just the thing that's pretty wild here about the other side of it, and this is where I said that, Wall Street won here, is that, Wall Street, bottom line, is turned off the machines because now the retail crowd is basically picking their pockets. Right. And of course, you only can pick their pockets so long before they'll shut it down. You know what I mean? So, yeah.
Right.
I think everyone
you don't want to be the person who doesn't get the chair when the music stops.
Exactly. And so the key to get out of this, folks, this is the key to get out of this, is that you're in the probability business, that the regulators themselves, it's their game, and it's Wall Street's game. And if you don't get that, you really, got to do some soul searching. Now, I got that. And I know this is Tigers and Tigresses that are still with us. I got that on the air in July of 1998. Okay? We were live on the air, folks. Picture this. The downdraft in 1998, it was a great downdraft. I was still selling stock like crazy, right? And on the air, so Tommy, I think you know the story, right? On the air, what ended up happening, right, is Greenspan and Robert Rubin came out at 3:10 in the afternoon, and they brought the interest rates down 2% when the market was open. Well, you should have heard me, folks. I was a little baby on the air. This ain't fair. I can't believe this, right? So I went from I was maybe $200,000 up to like $70,000 down in about 20 minutes. I was the biggest freaking baby in the world. You should have heard me. I mean, if I wish I had the tape. But I learned an amazing deal about that, okay, man, hold it. you better remember something, that they run the game. So, Anyway, we're still here. And now we know probabilities, man, because anyway, you get the gist of it. So.
Yeah, absolutely. And from my perspective, my take is just stay away from it. It's just it's too risky.
There's no doubt. There's no doubt. And understand it. And if you're in it, if you happen to have one of those stocks that they do run, because this is going to happen, folks. If you have one of those stocks, God bless you, man. Sell right into it, man. Sell it. Take your wife to the Vinoy, take them to the Four Seasons, go buy a freaking boat, go do something with it, man, because it'll blow up. And don't feel bad that it went to $100 and then it went to $200 the next day and you sold it at $80. Guess what? That doesn't happen, man. So cooking, brother.
Thanks, guys.
Have a great one, man. Have a safe one. Yeah.
I'm not sure this is as illegal as we're throwing around right here. Because we've seen these numbers. Naked shorting, like Pat just said, is illegal. You must borrow the shares to be able to sell them. But I'm not sure that it being over 100% is illegal, because you can, in theory, I buy a company, GameStop. My shares get lent to you to sell it. You sell it to Pat. Pat now owns the shares. Pat's shares are loaned to Joe as a short seller who sells it again.
I get your point.
Well, you're saying that it can't be over 100% or it's illegal. I want. That's not my take on things. I'll just put it out there that I'm not part of what you're putting out on that illegal. Naked short selling is, and the reason why you don't see it over 100% is because who's shorting it when it's at 100%? Because guess what? You wake up and today happens. I think it's, I want this conversation to really drive people to make some real change, and I don't want people to come away with thinking that that's illegal and everybody's seeing it happening and nobody's doing anything, because we've seen this before, I think. What am I missing?
I haven't seen 140% of a position shot. That's for sure.
Okay, but that's not illegal.
Well, no, for the broker-dealer community, okay.
But I just but not to push back. I just gave you the scenario.
I guess the way to do it is to go to the NASDAQ site, and they're going to show you that the aspect of what they've asked to come back in. And every single day it does not come back in. Meaning that NASDAQ is telling them that you got to buy the stock back, and they're not buying the stock back. That's my point. And that is illegal. That's against, it's against the regulation. I don't know if
okay.
Stay right there, folks. Tommy and I come right back. We have the Dow up 450, NASDAQ's up 139, S&Ps are up 52. And as we're talking, folks, you get the silver stocks running. Now, the silver stocks aren't running for the Reddits of the world. When we get back, we'll walk you through that. Come right back, folks.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 427, Nasdaq's up 91, S&P's up 45. Let's go over and take a look at First Majestic. So here's the number on this, folks. Okay, this is pretty cool how this shook out. So First Majestic right now is up $4.49. Okay, you're at $18. Okay, bottom line is a $14 stock last night. Now, two different things happened with First Majestic, and whoever was in the trading room, you know, and this is where there's plenty of retail traders that are very bright. And what happened is that First Majestic won a court case yesterday. And it was a monster court case, folks, because what's happening in Mexico is that you have the aspect of the tax courts that have been coming after companies, you know, for fraudulent taxes. And actually, Walmart made $1 billion settlement with them, okay? Bottom line, First Majestic won a reprieve in criminal tax charges yesterday, okay? Now, that being said, what also happened is that someone picked it up in the Reddit room. And I had said to Tom yesterday, I think I said on the air yesterday, actually, once they discover the metals, they're going to have a field day because the metals are a whole different ballgame. Well, now they've discovered the metals. They've discovered silver, okay? So you get AG up $4. You got PAAS, okay, Pan American Silver. That is up, what is this up? This is up $3. That's how it likes to trade anyway. My point is this, that's why this is, you know, you're going to go from one sector to another sector to another sector. So if you happen to be in the metal sector, what you want to be looking at is you want to be looking at the number of shares that are outstanding, see if they have options on them, and I would basically go out about 2 or 3 months because they're going to pick it up. I'm not going to go over the whole thing of you can kind of go through these yourself, folks, as to what can really move. And there's a few of them that they can move in an extraordinary way, folks, because they are, it's not that they're illiquid, is that there are a few of them that do not have a large float. And I sent you that article. Listen, this is amazing, folks. So Reddit got 1 million new listeners last night. A million signups in one day.
Yep.
One day.
And that was after, so they're at what, like 4.5 million, and they were at 2.5 million last Friday.
Yeah.
It makes sense. I've looked at that, if you're in the market and you haven't, out of even curiosity, taken a peek at that thing, how I had to go over it. And I'm not familiar with Reddit that much, I'm really not. but I had to go take a look, man. I don't think I technically joined the board or whatever because I don't have an account there, right? But you can probably pull it up. But as we're speaking, man, I got GME on a 1-minute chart. It got halted at 1017. It got halted again at 1040, and we're now under 300 from 480.
Yeah.
Like, it's just...
it's trouble, man.
It is. It is.
This is, as Gorman said, I mean, this is going to end, in a bad way for some people, but not for a lot. Not for everyone. Unfortunately, the kicker is, folks, is that if you don't understand, they can get down that fast either. Like I definitely do not understand. And you were talking about this on your show this morning, Tommy, how there could be so much volume at a stock that was $450 and $500 pre-market. I just don't. But I mean.
I do. That's it, right? I hear it's
like
I
okay.
have it up on the minute chart, and at the 10 o'clock on the dot, it reached 480 today. You did 311,000 shares, and just out of curiosity, real quick, times a price of about, we're going to put like 475-ish. You're talking about $150 million in 1 minute. Okay, I mean that's staggering. This is not like $1 million of buying or selling. It's every single minute, man, and you need buyers to keep that thing up there. It's like, man, if you're in this equity and you're not selling it, even right now at 300, you're not selling it. You're not one of the people selling hundreds of thousands of shares between that bar. The low of that bar was only 426. The high was 480. And there were 311,000 shares. If you weren't selling that and you're in this, I can't explain it, right? Nobody can right now as to how it's just maintained this. But I think we're all going to get a lesson in the next week or two of what parabolic runs usually end with. And I think we all know the answer if we've been around the market a while, and it's not good for a lot of people.
No. And it's pretty amazing that we haven't even talked about Apple. But let's get to Apple, okay? Come out with numbers, great numbers, right? Trading down $3. Monster. Yeah, seriously.
$111 billion in 90 days, man. That's a business I can get behind.
Isn't that amazing? $1.68 to the bottom line.
Yeah.
Monster number.
Seriously.
Tesla, I guess their margin went down, huh?
Yeah, so let's take a look at Tesla, because that's kind of the most fundamental, interesting one. We all know Apple's a mammoth company, man, and they're going nowhere. They are not the bubble in this market. They might be overvalued, okay? But they're not like a bubble like the tech stocks of 2000. Apple is not.
Right.
There are some companies that are right now, and we all know the likes of them. But Tesla, so it was interesting here, they have a profitable quarter, so 6 straight profitable quarter. They come in with 80 cents a share. The market was looking for $1.03. The margins, though, really come into things. So operating margins shrank to 5.4%. Down from 9.2. So they really crushed it last quarter in terms of the margins. Now, when you look at the price they're selling cars for, this is what I found so interesting. So here we go. Tesla said the average selling price for its vehicles in the fourth quarter was 11% less than a year ago. And that compares with a 3.1% gain in the average transaction prices for all new vehicles in the U.S. So the average vehicle's going up 3%, and Tesla was selling their vehicles for less than 10% less decrease. And of course, that's going to crush your margins, but they're trying to decrease prices, expand the number of vehicles. They had 500,000. Let's see, Tesla. They didn't give a specific number of how many cars they're going to make this year, but they said it anticipates beating last year's 50% growth rate, which would mean basically handing over roughly about 750,000 vehicles from the 500,000 that it did in 2020. Strong numbers, man, for sure. But the market a little bit dicey about, profit margins, decreasing the prices you're selling the cars for.
Yeah.
Yeah.
Wild. Let's go to Jose in Lakeland. Jose, what's happening, brother?
Top of the morning, Tom, it's trash pickup day in Polk County out here where I live. Trash pickup day. The truck is out front. It's roaring. I don't know if you can hear me. I'm wheeling Morgan Stanley to the curb for trash pickup. What's going on? How low can this go?
Yeah, so it came down with volume yesterday. And you know what this is going to be about, folks? This is going to be about interest rates once again, It's looking, we haven't broken the 1% yet. The 10-year is still at this just slightly over 1%, 1.038. I would say that Morgan Stanley can get into like this 63 area, and right now you're at 69, Jose. That's what it looks like. Yeah.
That's pretty bad. Holy.
Except that, it started out at 46, went all the way up to 77. So.
I got you.
Cooking, brother. Have a great one, man. Have a safe one. Stay right there, folks. Tommy and I are coming right back. We got Dow Industrials right now up 502. Nasdaq's up 141. S&P's up 57. We'll come right back.
Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome, folks. We have the Dow. Dow's up 479, Nasdaq's up 133, S&P's are up 54. And bottom line is that we got a little bounce going here, man.
I'd say so, man. Quite a difference a day can make, right? 3,800 in the S&Ps after 3,700. Last night, things looked a little bleak last night, man. When Facebook came out originally, they traded down about $20. Tesla came out, they traded down $80. Apple came out, traded down a few dollars, and I said, oh boy, what's going to happen tomorrow, man? But it's market shook it off. How about buying this dip, man? You know, it's like yesterday I kind of said to myself, finally, the dip buyers not rewarded, right? As in so often intraday. We saw it on what was it, Monday?
Yes.
It doesn't even look like a dip anymore. But that was 60 S&P points that we went down. And interesting that we're right back kind of near those lows of Monday. A little bit of resistance, but, yesterday. But, hey, we'll see what happens,
that
man.
low of Monday was 37.86, and we're 11 points over it now.
Yeah.
Right. I know. Pretty intense, right?
It sure is, man. It's everything is intense in this market right now, man. The Dow's up 500. Apple, everything. How about American Airlines this morning? Right now, here's what I actually thought of this morning. It's one thing when this is messing with GameStop, which is not instrumental to the success of the United States of America globally. You start messing with airlines and potentially, bring them down. That's not going to happen even close. That's the phrase, the government is not going to allow airline stocks to get decimated to the point where they might not be able to operate. Just something to consider when you start thinking about the possibility of regulations. And I don't think anything that the Reddit users are doing is illegal yet. But, man, you start messing with airline stocks and they might have trouble. That's a whole different story than GameStop.
It's going to be the short sellers that have trouble because you can see it's 25% short position. Well, the Reddit, they're buying it.
They could. Doesn't mean that this thing doesn't go, exacerbate the other way, though, on the negative. And then what happens, right? We'll see.
Stay right there, folks. Think of Swim coming up next. Thanks, pal.
Thanks, man.